That's letter A. So first we'll solve, by the way, we're done with the accounts. So 8,050,000 minus 750,000, that's 8.2 million. And that is letter B. So that's for number 2. For number 3 and 4, you basically just have to follow the same method, the same format, same formula. Ending back 50,000 and that's letter A. So first we'll solve, by the way, we're done with T accounts. We now move on to the multiple T accounts or interrelated T accounts, the second classification. So we'll start with 14-10 and then later on we'll move to 14-9. I want to emphasize 14-9 because it's actually interesting. So let's start with 14-10, the small company. Question is, what amount should be reported for cost of goods sold in 2019? So basically, it's 14-10. Talk about cost of goods sold. The T account we will use would be inventory. So you have beginning amount of 2,900,000, ending balance of 2,600,000. Okay, and then you have cost of goods sold. Where do we get cost of goods sold? On the debit side or credit side? When we journalize under perpetual inventory system, we debit cost of goods sold, credit inventory. So if we're looking for the amount, the cost of goods sold, then we look at the credit side of inventory. That means it's in here. So the answer of the problem is on the credit side. However, we cannot find that because we're missing one element, purchases. When we purchase some items, we debit inventory, credit cash, okay, under perpetual inventory system. So purchases is not given. That's why we need to look into the other T account, which would be accounts payable. So this is what I meant with multiple interrelated T accounts. So you have, for you to answer inventory, okay, cost of goods sold, you need to look into first accounts payable. So for accounts payable, beginning balance is 500,000 on credit side. That's the normal balance. Ending balance is 750,000. So it's given here the entity paid supplier. So when you pay, that would be debit cash, debit accounts payable, credit cash. So if you pay, you debit accounts payable. So we put 4,900,000 on the debit side. So in order to compute for the credit purchases, we look for the credit side. Because if you'll notice the journal entry when you buy on account, that would be debit purchases or inventory, credit accounts payable. Accounts payable is credited. So first, look for the credit purchases. It's 49 plus 750,000 minus 500,000. That will give you 5,150,000. So this is our credit purchases. So now that we have credit purchases, we can now use it here in our inventory T account. So you put 5,150,000, and because we already have the necessary information we need, we can now compute for the cost of goods sold. So that's the beginning balance of inventory, 5 million plus credit purchases of 5,150,000 minus ending balance of inventory, 5,450,000. So that is letter A. So you may be comfortable with the income statement format. Okay, it's up to you. As long as your you can solve faster and you can solve much more effective, then that would be better. For me, it's much easier when you use the accounts. Next problem is 14-9. Hard company. So if you'll notice, you're only given with a cash basis income of 6 million. And you have two accounts. You have AR and AP. You are asked to convert this cash basis income to accrual. Okay, so first we'll look into the AR account. So AR and income. So what account connects AR and income? That would be sales. Okay, because every time you have sales, you recognize AR, and if you have sales, then you will recognize income as well. Now, based on the problem, your AR beginning has an amount of 2 million. 2 million. Now, it is presumed that the beginning balance of AR, the beginning balance of AR are the first to be collected. That would mean this 2 million has been collected during the year 2019. So because it has been collected, it was included in 6 million. If you're going to think about it, this 2 million AR beginning, it does not refer to the sales for 2019. Rather, it refers to sales for the previous year, 2018. It was just not collected. That's why it's written or stored in the AR beginning. Because it relates to sale for the previous year, this AR beginning should not be included in the current year income. Next is AR end. AR end has a balance of 4 million. When you say AR end, it's still a receivable. So as of the end of December 31, 2019, it remains receivable. Because it's a receivable, meaning no cash has been received yet, it was not included in the 6 million because 6 million only includes cash receipts. Take note, this AR end refers to sales provided for the current year. The only thing, di lang siya collectible. Okay? So under accrual basis of accounting, you need to add this one. 4 million. Add 4 million. Next is AP beginning. So accounts payable, then you have income. The account that connects accounts payable and income would most probably be purchases and of course subsequently cost of goods sold. So if you purchase something on account, you'll have purchases, and then purchases will be used in computing cost of goods sold, and eventually cost of goods sold will be used in computing your net income. Now, accounts payable beginning has a balance of 3 million. Same as AR, this beginning of 3 million refers to purchases from last year. But because this was collected, it was paid this year, it has been included in this 6 million cash basis income. So, in order to reverse the effects, you need to add it back. Okay? Because it has been deducted from your total income given that the payment was made in the current year. So to reverse the effects, you need to add it back. Now for accounts payable end accounts payable end refers to purchases made this year. Purchases made this year. So supposedly that purchases should have been deducted in order to arrive at your income. However, because this is cash basis and it is still a payable, and so it was not recorded or it was not deducted. So in order to recognize these purchases, we deduct 1,500,000. So our accrual basis net income would be 6 million minus 2 million plus 4 million plus 3 million minus 1.5 million. That will give us 9,500,000, and that is letter D. So here's an easier way in computing 14-9. So this will